Nvidia just released a killer earnings report, but the market reaction was largely flat. Today, I'll dive into what Wall Street is missing, break down the earnings report, and show you why Nvidia is currently completely underestimated by the analysts. At the end, I'll go over what I'll be doing with my own portfolio and whether I'll be buying or selling the stock. Welcome back, everyone. I hope you had a great day. I absolutely love Nvidia earnings day. It is like the Super Bowl for investors. Nvidia is just this AI darling that has carried the stock market to new highs over the last 2 years. The amount of growth that it's seen is absolutely insane. The amount of impact that Nvidia is having on our everyday lives is crazy. If there's no Nvidia, there's no OpenAI, there's no DeepSeek, there's no Claude, there's no Gemini. Nvidia is single-handedly revolutionizing our world. All of these AI developers are completely reliant on their GPUs. So every 3 months when we get to hear from Jensen, get to hear about their earnings, let's just say I have my popcorn out and I'm ready to freaking go. So let's dive right into it. Going into these earnings, we had some pretty high expectations. The revenue was projected to come in at just a tad over $38 billion. The EPS was estimated to come in at 85 cents a share. And the guidance anticipated for Q1 2026 was $42.1 billion. Now, if you know anything about Nvidia, they're always going to kill it. If you've been keeping up with the news, it should not be a surprise to you that Nvidia was going to beat their earnings. Well, the earnings are out, and we finally got the numbers. The total revenue was up to $39.3 billion for Q4. That's a beat by 3.08%, pretty much expected. That's up 12% quarter over quarter, 78% year over year. These are massive growth numbers for Nvidia. The net income, $22.1 billion, up 14% quarter over quarter, 80% year over year. Now, I want you to pay attention to this one, right? Earnings per share, up to 89 cents per share. That's an 82% year over year growth. Now, if you notice the net income versus the earnings per share growth year over year, the 82% versus the 80, that extra 2% comes from the share buybacks that Nvidia has been doing. So they have been returning money to the shareholders via buybacks, and that's why you see the earnings per share growth beating by an extra 2%. So they beat by 5.22%, which is outstanding. You couldn't ask for better numbers. Here's the heavy hitter, though. What is the forward guidance going to be? A lot of people coming in were really, really nervous about the forward guidance, right? DeepSeek happened in January. Everybody was selling out of Nvidia. Nvidia was down by 18% in a single day. There was fire in the streets. There was chaos on Wall Street. Well, guess what, guys? When you make AI cheaper, more people want to use AI. And that is exactly what's happening. They increased their forward guidance by $0.9 billion, up to $43 billion for the next quarter. It's about a 9% increase quarter over quarter. The fact that Nvidia is returning quarter over quarter, with the S&P 500 on average returns year over year, your jaw has to drop at that. You have to be infatuated with this company, the way that they're growing their revenue. They have insane gross margins. They're doing such a great job. Speaking of gross margins, let's talk about them. If you paid attention to the filings this quarter, Nvidia's gross margins were compressed a little bit into the low 70s. Now, this is pretty much expected, right? Now that Nvidia is ramping up the GB200, there's a lot of transition costs that are involved with that. If you've been keeping up with the news, the Blackwell chips have been experiencing some manufacturing issues here or there. Nvidia has very swiftly taken care of them, but nonetheless, that's going to compress their margins a little bit because the chips are a little more expensive to create, especially when they're just rolling them out and they're trying to create as many as possible in as little time as possible. They're time constrained, so I would much rather the company compress its margins a little bit, actually produce the chips and get the chips out to the people who want them, than do everything just for the sake of keeping their margins in the high 70s. So this is completely reasonable. However, if you listen to the earnings call, one of the things that the team said was that while Nvidia anticipates these lower gross margins going forward into Q1, by the end of fiscal year 26, those gross margins should be ramping back up into the mid to high 70s. So there's no need to worry. And even if, honestly, I don't even think I would care if Nvidia dropped its gross margins down into the high 60s. I don't think it would really change the story for Nvidia. At the end of the day, having gross margins in the 70s is such an achievement, especially at such a large scale and for what they're doing. They're producing physical chips. To have gross margins even in the 70s is absolutely insane, and it's a real testament to how well Nvidia and its business model are running. So I took this from CNBC. This chart popped up. I think this was a really good picture for people just to summarize where the gross margins were. In Q1 of 2024, we were down at 65%. That rose to an all-time high in Q1 of 2025 at 78%. And ever since, we've had some compression down to 73% this last quarter. Now, For this next quarter, they're projecting gross margins 71%. Again, I don't think 71% gross margins, first of all, is anything to sneeze at, nor do I think it should be any concern for any Nvidia investors. This is just part of the game. The company is ramping up the GB200. There's massive demand for it. I'd much rather them compress their gross margins than allow a competitor like AMD to satisfy the demand of their customers. We don't want our customers cheating on Nvidia, because then they might get involved into a different ecosystem and then just keep buying AMD chips. Nvidia has to stay at the forefront of this game. Otherwise, people are going to swoop in and take market share. Now, let's break down the revenue by segment, and I want to focus in on two of the segments in particular. Data center brought in $35.6 billion this last quarter. Gaming brought in $2.5 billion, professional visualization at $500 million, auto at another $500 million, and then OEM another at $0.1 billion. Now, you can really tell that Nvidia is highly concentrated in the data center segment. Basically, if the data center segment doesn't work out for Nvidia, or for some reason demand rapidly declines, the entire company's future is pretty much put in jeopardy. So it's a really big concern for a lot of investors. But what I really love to see from Jensen and the entire Nvidia team is that they're really trying to diversify where they're getting money from. So of course they have gaming and they provide GPUs for that, but I think the next big thing for Nvidia is actually going to be their auto industry. The chips that Nvidia is going to be able to provide to the autonomous driving scene is going to be huge. Honestly, I think Wall Street is vastly underestimating how big this market is going to be in the future, and it's just another reason why I'm really excited about Nvidia. When we look at the data center, in Q4 we saw a 16% increase quarter over quarter with a 93% increase year over year. The data center segment almost doubled over the last year. That is crazy. Of course, in this last quarter, there's been a massive demand for the Blackwell GPUs, which generated over $11 billion in revenue. This is huge and a really good sign for Nvidia. Already in its first quarter out, the Blackwell chips are being quickly swiped up, adopted, and sold. Nvidia is producing them and sending them straight out into the marketplace, and people just cannot get enough, and it's a really good sign for what Nvidia has been doing with the Blackwells. Now, regarding the data center segment, I think it's really important to talk about the biggest customers of Nvidia, and of course, I'm talking about the hyperscalers. Now, the hyperscalers reported their earnings back in January. It's really important to look at the hyperscalers' CapEx spend. The reason that is if the hyperscalers are spending more and investing more into AI, chances are they're probably going to be at least allocating some of that cash into more Nvidia GPUs. We already know that the major cloud providers don't have enough GPUs to meet demand. They're constantly buying more and more and more chips from Nvidia just to meet the demand. There are a lot of people now who are using these cloud providers to get access to Nvidia GPUs, and that's why the hyperscalers are so important. The hyperscalers, it's not just Amazon, Google, and Microsoft using the chips for themselves, it's actually people coming in and paying Amazon, Google, and Microsoft to use the Nvidia chips, and that's the key. AWS said it's going to probably spend over $100 billion on AI in 2025. Google, $75 billion in 2025. And Microsoft, $80 billion. These companies are increasing their capex like nuts because they know to keep up with customer demand for Nvidia chips, they need to keep buying. Let's talk about the automotive segment. In my opinion, the automotive segment is actually the most underestimated segment about Nvidia. Now, I think we're pretty far away in terms of full self-driving and autonomous fleets. I think Elon Musk tends to hype that up a lot. I think Cathie Wood, who's now a Tesla shareholder, I think she's hyping that up a lot, and I don't think we're going to see that for another probably 4 to 10 years, somewhere in between there. That's a pretty broad range, but I don't think we're going to have autonomous fleets next year is my point. Automotive and full self-driving is going to take a little bit longer than we anticipate, or what most people are anticipating. However, once it does ramp up, I think that Nvidia is going to dominate that market. The chips that Nvidia provides are going to enable the self-driving capabilities that cars need in order to accomplish the things that people are currently dreaming of. The reason I think this is because Nvidia already has key partnerships with some of the greatest automotive makers in the world. Toyota and Nvidia are partnering to develop next-generation vehicles using Nvidia Drive AGX Origin and Drive OS. Toyota's using Nvidia's operating system. That's huge. Aurora and Continental are collaborating with Nvidia for their driverless trucks, and they have a commercial launch expected in April of 2025. Hyundai's partnering with Nvidia to accelerate AI solutions for future mobility, integrating Nvidia's AI technologies across Hyundai's vehicle lineup. AI is coming to your cars, and it's coming in the form of Nvidia GPUs, guys. Some of these are coming out in April of this year. I think that this automotive segment is going to be the next big thing for Nvidia, and I think a lot of people are really discounting the growth of this segment. Now, I don't think it's going to overtake the data center segment anytime soon. I think it's probably within the next 10 years. There's a really big growth story here that a lot of people are discounting and forgetting about, and they're just thinking of Nvidia as this data center centric company. Nvidia is a lot more than just their data centers. I think they're actually going to end up being a household name for people just like Apple. Everybody is going to know that Jensen Huang and his company are powering the world and the new lifestyles that we're going to live within the next 1 to 2 decades. In 2025 alone, Nvidia is projecting that their automotive business is going to reach $5 billion in 2025, which is a 5-fold increase from 2023. We need to start thinking about the automotive segment as an actual legitimate segment that's going to be twice the size of its gaming segment. Nvidia is no longer going to be for gamers. It's going to be for cars and data centers. Mark my words. We'll come back to this in 5 years and we'll see who's right. Next, I wanted to show you guys this video of an interview of Jensen after the earnings report with CNBC. He's saying some really interesting things that I don't think enough people are talking about.
Now, long term, the thing that's really exciting is we're just at the beginning of the reasoning AI era. This is the time when AI is thinking to itself before it answers a question. Instead of just immediately generating an answer, it'll reason about it, maybe break it down step by step. It'll do maybe some searching in its own mind before it creates and composes a smart answer for you. The amount of computation necessary to do that reasoning process is 100 times more than what we used to do. So if you could imagine, we thought computation, the amount of compute necessary was a lot last year. And then all of a sudden, reasoning AI, DeepSeek was an example of that. ChatGPT 4o is an example of that. Grok 3 reasoning is an example of that. So all of these reasoning AI models now need a lot more compute than what we used to.
Jensen's telling us, we thought that last year's compute was a lot. Jensen's saying, just wait, guys. You have no idea how much compute is necessary to actually have AI do functional, amazing things that we're dreaming about. We need 100 times what we currently have for reasoning. The AI that we know today is nothing compared to what it'll be in 1 year, in 3 years, in 5 years, in a decade. The amount of compute that the world needs is going to 100x at least. And this, I think, is the fundamental crux of what you need to believe in order to be an Nvidia investor. If you're going to be an Nvidia investor, you have to believe that the world needs more compute. If you don't believe that, I don't know why you're bought into the company. Nvidia exists to enhance the way that our computers think, how quickly they can perform tasks, and how efficiently they can do it. If someone looks at me today and asks me, Alex, what do you think about Nvidia? I would say they are greatly positioned to be the leader in accelerating our AI compute and providing the world with the computing power that it needs to absolutely change the way that humans live their lives. That is the power of Nvidia, and that's what you need to think if you're going to be invested in this company. Now, there are a few other things that I think investors should be thinking about. Nvidia stock is only a great investment if 2 out of the 3 things are true. The world needs more computing power over the long term. GPUs are the key to that computing power. Or 3, Nvidia will adapt to any technological changes related to providing computing power at a low and reasonable cost. If you have 2 of those things, I think that Nvidia is going to absolutely dominate over the next few decades. Personally, I think we just heard Jensen. We know that the world needs more computing power. Now, it's just whether you believe 2 or 3. I think one of the greatest threats to Nvidia is if somebody else creates some sort of chip or device that can more efficiently think than a GPU. GPUs are so great because they can compute really simple math equations so quickly and so easily. That's why it's better than a CPU, right? However, if there's a technological advancement that changes the game, and instead of a GPU being the best at computing, it's something else. Maybe it's a TPU, maybe it's custom silicone that these hyperscalers are making. That's trouble for Nvidia, because Nvidia's entire company is built on the GPU. They invented the GPU. However, let's say that the GPU is no longer at the forefront of computing, and maybe the TPU is, or something else, right? Well, if you think that Nvidia can adapt quickly and start creating the thing that is providing greater compute at a lower cost and higher efficiency, then Nvidia will just be the market leader in that too. They have so much money. They have so much cash at this point. They can make so much investment into their research and development. They could probably reverse engineer any chip in the freaking world and still come out on top. And so personally, I believe in all 3. I think that no matter what happens, even if the GPU is put into second place by some other chip that's created, I think hands down, Nvidia and the team there are full of excellent leaders who are nimble and can navigate the space so quickly and easily that I'm really not worried about technological disruption for Nvidia's business model. I think that they can adapt quickly. I think they'll constantly have their foot on the gas pedal. They're not going to get complacent. They're going to stay paranoid. And overall, they're going to stay a winner in advancing the world's computing power. All right, Alex, what are you going to do with your portfolio? Buy, hold, or sell? Very great question, audience. Thank you so much for asking. Now, full disclosure, Nvidia is almost 50% of my current portfolio. So honestly, I'm not going to do anything. I'm going to hold my current shares. I'm not going to put more money in because I really just don't need to expose myself much more than 50%. I already think I'm crazy for having 50% of my portfolio at Nvidia. I bought in, I haven't sold a share, and I'm very happy with where my portfolio is at. I have a really high risk tolerance, and I think that's okay. Some metrics that I think we should look at is, as of tonight, the current PE ratio is 44.65. That's pretty reasonable for a company that's growing at 30 to 40% a year. Now, here's the important one. The 12-month forward PE ratio is at 28.76. That's less than 30, and for a company that's projected to grow at 20% a year over the next few years, that's pretty low. I think this company easily deserves a PE over 35. So that means a few things, right? I think there's going to be multiple expansion for Nvidia over time. And the second thing I believe is the world needs more compute. The revenue is going to grow faster than we expect. There are a lot of things that are going to go right for Nvidia over the next decade. And I think that they have enough business segments, like the automotive segment, that are going to grow extremely rapidly. And Nvidia is going to take a massive market share really early on. So with that being said, I would really buy Nvidia. I would snatch up every share I could under $120. Between $120 and $140, that's sort of like the maybe gray range for me. I wouldn't be adding here, but I would definitely be interested depending on what the news is during that time frame. If I didn't have a position in Nvidia and I were looking down the barrel at $120 to $140, I really wouldn't sneeze at that price. I think getting at least a little bit of exposure to Nvidia is probably a good thing, especially since it's going to be such a dominant market leader. At current levels, at these current ratios, I personally feel like anything above $140 is a hold. So I wouldn't be adding to the position. I would just be riding it out and letting Jesus take the wheel. Ladies and gentlemen, overall, I'm super excited about Nvidia. I think they have a super bright future, and I hope you all feel the same way. I hope you guys enjoyed this video. If you feel that I've earned it, please subscribe, and I will see you in the next one.